I'm Catherine Murray. Welcome to Market Call tonight. Our guest tonight is Jamie Carrasco. He's a portfolio manager at Canaccord Genuity. Take your calls, emails, and tweets on North American equities. You can call us toll free at 1-855-326-6266. You can also send us an email to marketcall@bnnbloomberg.ca, or you can tweet us at marketcall. Jamie, a lot going on in the markets for sure, and a great performance on a year-to-date basis with double-digit returns across the board for North America. What are your views today, and where do you think we go from here?
Well, I think that three things, I tend to think out of the box, three things that I'm looking at. One is the markets are going to, in my opinion, continue moving because I think Trump is politicizing the Fed. I think going forward, he will continue to exert much more political pressure over the Fed and get them to print money. I think his opinion is going to be, well, if it was good for the gander ways and good for the goose ways and good for the gander. So he needs to fund a lot of projects infrastructure-wise. So I think that'll be good for the markets, at least until the election, to get him elected. Another issue that I think that is interrelated to that is the dislocation we're starting to see between global central banks. The IMF has warned that the Americans are not going to be willing to bail out the European banks, and that's going to be an issue. I think Trump won't. I think this time around won't be like 2008. And that's important because we're reaching debt saturation. A big piece of this puzzle, I think, as well, is what's happening in the gold sector. Again, gold has money. No central bank is selling. They're all buying. They bought more gold last year than they have since Nixon unpegged. And an important shift has occurred that as of April, gold has gone back to being a Tier 1 asset, which hasn't been since the 70s. I think that's an important factor.
Where do you see that that type of data and analysis? Because if anything, we've seen the price of gold not move at all. So I don't know who,
exactly.
No, but I don't know who the buyer is really. If you say that all the central bankers are out there buying, I'm not.
Well,
we're not seeing that kind of demand reflected in the price.
Well, we're not seeing the demand reflected in the price because what's happening with the paper market. But we know that there's been a whole flow of gold that's been leaving for Asia, for Russia. Russia's up to 2,200 banks. Look at the fight that's going on between the 2,400 tons that are owned by Italy, Salvini, and Draghi with the Central European Central Bank, where they're saying, well, the gold is owned by the people, and Draghi's saying, no, we control the gold. So it is becoming an issue, right? All the data, if you actually look at the World Gold Council, you look at Incrementum and Gold We Trust, which is, I think, those are the two best reports, clearly show the flow of gold over the physical flow of gold, right? Again, when it comes to the price, I always go back to the warnings of Terry Duffy, which he gave about 2 years ago, where he said, and I quote, if you look at what's going on around the world. Now, when the chairman of the COMEX says going on around the world, he means systemic risk. Gold should be somewhere near $5,000 to $6,000. That's what he said 2 years ago. And people are dismissing that fact, and they shouldn't dismiss it forever because one day we're going to see a huge spike in price. That's his quote. Now, if you look at the physical flow, it continues to go. So they keep telling us it's a barbarous relic, but nobody's buying. Nobody's selling. There is a game afoot because gold has money. So what is important about the Tier 1 structure? So in 2008, gold wasn't a Tier 1 asset, meaning that if a bank held gold within its reserves, they could borrow against it. Now, that's a very important shift because we know for a fact that China has transferred more than 18,000 tons since 2008 over to its banking sector. So if we get into trouble again, they'll easily be able to say, okay, well, we have 18,000 tons. How much do we need to raise the price to deal with this credit crisis that they have? Which is exactly what Roosevelt does in 1933. So anybody that's saying the 30s are repeating, that's what they're talking about. We have a populist wave within politics. We have a complete shift within the currency reserve. And I think that for Trump to really achieve MAGA, Make America Great Again, he's got to kill the value of the dollar because it's no point bringing 5,000 jobs from Ford if you're still competing with Chinese labor. You have to bring the value of the dollar, and that can be achieved through a restructuring of the monetary system around gold, which is kind of like what James...
Who's going to do that?
Well, I think it's got to be a united effort, or it's going to be done.
But what country is going to want to restructure
China and the U.S.
monetary system around gold?
Good question. So China and the U.S. have been working on this trade deal forever, but a couple of months ago, one of the governors of the central bank, and Mnuchin, just over about 2 weeks ago, said that this is also a currency agreement. So it could be easily done between China and the U.S., right?
But that's currency not gold. We're not shifting from fiat currencies to gold.
No, but
that's what you're suggesting.
But hold on. If we are going to rebalance the basket of currencies, you need something to peg it with. And historically, for 4,000 years, gold has been the peg, right? Because you need a constant. You need a monetary constant of value.
So you think that in some type of trade agreement, we will have China and the United States agreeing to peg their respective currencies to gold?
I think it's highly probable that some kind of a currency restructuring needs to be done, similar to the, not the Paris Accord, sorry, but the other city accord that was done in the 80s. And this type of accord has been done in the past. Nixon does it.
Yeah.
Right? So I think something...
The Plaza Accord.
The Plaza Accord, sorry, that's what it was. I think something...
That was still fiat currency. The only reason why I'm bringing it up, and I know we have to go to break, is because I don't know that a fiat currency agreement would translate into a peg towards gold and therefore lift the price of gold. But I'm trying to connect those
Right,
dots.
the problem is in a world of full fiat currency as we have, where it's no longer working, how do you rebuild it without having a monetary peg? You need a constant within that.
What's
and for 4,000 years, it has been gold.
All right, we're going to take a quick break. We'll be back with Jamie Cresco. He's portfolio manager from Canaccord Genuity, answering your questions about North American equities. You can call us toll free at 1-855-326-6266. Welcome back to Market Call. Tonight, let's take a viewer email right now. It's from Jack in Kelowna, BC, and the subject is Inter-Pipeline versus Enbridge. Which pipeline is a better long-term hold, as well as a dividend grower, Inter-Pipeline or Enbridge? What do we think?
You know, I like them both. I think when it comes to the pipelines, the way I look at them is as monopolies that pay us good cash flow. It's steady. So the way I use them is I have about 3 or 4 within the portfolio, and I like to switch within them. Right now, I like Enbridge because the yield's higher. I believe, what is Inter-Pipeline's current yield, if you can bring it up?
Yeah, I'll get it up.
But I think from a relative basis, if you look at Inter-Pipeline, they've had a nice rebound. Enbridge has had a nice rebound, but the yield is higher. So when it comes to the pipelines, I like to acquire them for cash flow. So which one's giving me the best relative return, both on dividend yield and upside? And within that, I think that I would choose Enbridge because on an overall rate of return, I think it'll be a little bit higher.
And what are the risks that you think about when you think about owning pipelines?
Very little risk because I think we're not building any, right? One of the issues that we have is that because of the green movement, we have very little build out of pipelines. It's becoming a big issue. I think that's we need an energy strategy Canada-wide where we need to ship oil to Ontario. Right now, what are we doing? We're selling our good quality oil to the Americans, refining it there and buying it back in Ontario, right? We don't have a national policy. So I do think that when it comes to the pipelines, there are monopolies that are in place and very, very strong, very hard entries to the sector. So the ones that are there, I quite like, and I think they continue to be great Canadian companies.
Okay, the dividend yield on Enbridge is 5.95%. All right, let's take a caller right now. Mark in Gatineau, Quebec. Go ahead.
Yes, good evening. Thank you for taking my call. Yes, Jamie, I'd like to have I notice you're very bullish on gold for a fact, just like me. Could I have your thoughts on Premier Gold, symbol PG? They got a good cash position at 44 million. Good share structure at 211 million shares. Projected production 80 to 95,000 ounces with 225 to 250 ounces of silver. All-in costs at 900 to 950. Also, they got big backers like Barrick on one of their projects at the Arturo mine in Nevada, and also with Centerra near Geraldton, not too far from Barrick's Samo mine. In-ground resources pretty good at 5.1 million. So I'd like to have your thoughts on that. And I agree with you. Trump has to devalue the U.S. dollar. Thank you kindly. Have a nice evening.
Actually, that's an interesting point on devaluing the dollar. I think that'll come more as a result of putting pressure on the Fed. It'll come hand in hand. It'll be good for the market, but not necessarily good for the dollar because we're going to start to see that political dislocation. When it comes to Premier Gold, it's not one that I own, but we definitely like it. We have it with a 450 target. The deposit is in Mexico, so it covers the things I look at when I'm looking at a gold company. I want to have low cost of production, good management, in geopolitically safe areas and big reserves on the ground. This company covers them all. It hasn't moved. None of them have moved. I think that there's a lot of value in these companies because, when you look at the Warren Buffett value, the Graham Dodd value proposition in terms of the breakup value of companies, I find a lot of companies that are there that, some of them are trading at cash values right now. So it is a good time to be picking companies. This is one that I would definitely consider. It's not part of my portfolio. They have a pretty good deposit, and they've definitely the option agreement to acquire the San Felipe project definitely looks interesting. But they have bought that from Americas Silver. That is a good deposit. But I own Americas Silver, and that one is one of my favorite companies, and we'll talk about that later because I have it as a top pick.
Okay, let's take another caller right now. Dave in St. Catharines, go ahead.
Hi, Jamie. Hi, Catherine.
Hi.
Thanks for taking my call. Jamie, I was wondering if you could talk about Baytex. I know that they have some American down in the Eagle Ford. I was just wondering, is that going to give them a boost? Thank you very much. Have a great day. Bye-bye.
Well, we like it. We have it with a 450 target. The current dividend is actually, they're not even paying a dividend. This is a company that I owned in the past. I've actually shied away from Canadian oil companies. I'm saddened by the fact that, if you look at our oil, it's being sold at a huge discount to the Americans, and they're the only buyer. So because of that, they're trying to diversify and shift. On the energy front, the Canadian companies I like are the ones that are more participating outside of Canada, like Vermilion, for example, or the big global companies where the cash flow is steady. Having said that, we have had a rebound in oil prices. How quickly does that disconnect, considering the politics between Putin and Saudi Arabia? The Russians just this morning, or just yesterday, they said that they were going to walk away from whatever deal they were trying to do with the Saudis, and then they didn't care if oil prices drop. Because of that, there's a lot of politics within the energy complex, right? So right now, I'm kind of more underweight energy than anything. I would keep it right now. I believe we have it at about a 6% weighting in the portfolio, and with that, it's mostly the bulk of it is foreign companies where we can definitely get a dividend yield.
What kind of foreign companies?
I've been buying it through the one I really like is the Energy Leaders ETF, which has the 15 biggest oil companies, and they also do cover call writing, so it gives me a pretty good yield. And Vermilion as well. That one has a good dividend yield, but I tend to stick more within an ETF because I want to diversify the exposure to the individual companies until we see oil prices really start to take off, which could happen, but it hasn't happened yet.
And sorry, which ETF was that? Maybe we can bring it up from the control room.
It's the Energy Leaders.
Energy Leaders.
By Harvest.
Okay.
Harvest Energy Leaders.
Trade in Canada?
HDF in Toronto.
Okay. All right,
Yeah.
and maybe we can just bring that up, just for our viewers.
I believe the yield's sitting at about 8.5% right now.
Okay, yeah, Harvest Energy Leaders plus Income ETF.
That's the one.
Okay.
Okay, so I find that is a better way to play it because, again, the sector isn't moving. There's a lot of politics, but I want to have a participation in the sector until we see some light at the end of the tunnel.
Okay, and Jamie, just to be clear, there's a dividend associated with this, or no?
There should be one.
Okay, it's not coming up here, but I would think that there would be.
Yeah.
All right. Okay. We're going to be back with Jamie Cresco. He's portfolio manager from Canaccord Genuity, answering your questions about North American equities. You can call us toll free at 1-855-326-6266. Welcome back. Let's take another caller. Nazar in Scarborough. Go ahead.
Oh, hi, Catherine.
Hi.
Hi, Amy. Hi, May. Crescent Point Energy has recently undergone internal changes with new directors on board. The stock price has reflected these changes seemingly positively, with the rise in stock price from a low of $4 to almost $6. Do you see that it is now out of the penalty box and can be considered a buy here at $5.50? Thank you for taking my call.
You know what? It has had this is one that I've owned in the past and continue to go back to it as one of my first entries. I really like the management. I've always like the way they do the right thing along the way, and I like the changes that they're doing. I'm not adding Canadian Energy, but I would definitely be looking at this one as an entry point. So with the dividend, though, at 1%, there's not much. All you're going after is equity growth, right? So Nazir, I don't know what your age is. If you're looking for a dividend, or you're looking just to participate in the oil upside. If you want growth, this is a good entry point. Again, it's very well priced, but I would want to see some light at the end of the energy tunnel, the energy sector first, right? And I don't think we're going to have any anytime soon. So I would rather look at other areas to generate income or growth.
Outside of the price of oil, what are the potential issues with this company?
Well, we like it, actually. We have it with a $7 target. We do have it as a speculative buy, though, right? So in our view, the company has reaffirmed its production guidance, and we're quite comfortable with it. But again, it is ranked as a speculative buy. It has come down quite a bit, and at this price, might make a little sense. But again, how long are we willing to wait?
Okay,
right?
Let's take a tweet right now from John. The question is, can I please have your opinion on Scorpio Gold?
You know what? I'm sorry, I don't have an opinion on Scorpio. Let me see if we follow it. It's not one that I've looked at. I've seen the name before. Scorpio. No, and we don't even follow it, so okay. I can't give an opinion. Okay,
let's take a caller then. Jerry in Vancouver, go ahead. Jerry, you there? Okay, I know he called in. He is looking at Teck Resources.
I like Teck. You know, I like what's happening with copper. Copper is showing a little bit of signs of strength. I believe if you can bring the price, I believe tonight it closed above 330, I think it was.
Okay.
The price of copper. And what I like about Teck, it's one of the premier base resource companies. So if you want to play the base metals, this is one of the great places to start. I've played it in the past, and I think, you know, it's definitely formed a nice base. And hang on, give me 1 second. Sure. What is our target? So we have it with a $39 target, and as a buy as well. It is it's one of the most impressive Canadian companies. I've always liked it. The big production of it is zinc as well, which is, zinc is one of the metals that has had nice price appreciation over the last while, and there is a bit of a shortage in zinc around the world. So yes, this would be one of those companies that if you wanted to acquire base metals exposure, would definitely fit the bill very nicely.
And how much are you wanting to do that at this point?
Because I'm overweight gold on precious metals within the sector, I wouldn't be looking at more than 3 to 4% in base metals right now, just to start to get my feet wet. And that would be about it for now.
Okay, let's take another caller. Chris in Mississauga, go ahead.
Yes, good afternoon. How are you?
Good.
And my question is on silver. I've been buying silver for quite a while now, and just physical silver itself. And what's your point, or what do you think of silver? Thank you so much.
I like silver. Actually, silver, I've stopped buying it because my wife said, well, you keep bringing these coins home, we have enough. But it's I think silver is one of the cheapest metals in the world. If you look at the price, it hasn't moved if you bring up the longest chart that you can bring up, the price of silver hasn't gone anywhere for the last, 15, 20 years. It's actually not kept up with inflation whatsoever. I think at some point that'll correct, and so because of that, I think if you look also at the gold to silver ratio, it definitely signaling that an overweight to silver makes sense within a precious metal position. I wouldn't be buying just the base metal, though. The way I see silver and gold specifically, I see them as money, so no different than holding US dollars or euros. So I keep that allocation of physical as part of my cash position. And I think the true speculation is in the companies. And within those companies, one of the things why I like silver, 80% of silver production comes from copper. It's a byproduct. It's not pure silver. So pure silver is only 20% of global production. And because of that, they're rare, mostly concentrated in the Americas. Mexico has the biggest silver production. Bolivia should be, but politically it hasn't been able to get off the ground. And because of that, I think there's a lot of good quality stocks to be had within the silver spectrum.
Jimmy, you do definitely like the precious metals as an alternative to cash or fiat currency. Does that mean you like Bitcoin?
I do,
or
but for different.
cryptocurrencies?
I like the technology. I think if you look at the technology, I find it very similar to remember back when the dot-com bubble burst. You had all of these companies that had a massive rise, then they fall out of bed in the early 2000s, and out of that comes AOL, comes a lot of companies that today we wish we had back then. I see the technology in the same way because it is a ledger. You know, I see more and more financial companies coming into the sector. So, no, I don't see it as a competition. I see.
But do you buy into cryptocurrencies?
I do, into Ethereum, but as a ledger, not as money, not as completely out of this. I see it as a technology that will save money for anybody that has a lot of paperwork. That's why Fidelity has fully implemented a blockchain-based tracking. So think about Fidelity. They have a million clients, a million investments over the world, a million mutual funds. Before that was tracked by paper. Now it's fully tracked through a blockchain-based platform, right? So it saved that, it takes that part out of the equation. There's a lot of savings in that. So the technology itself I like. So I don't see them as an alternative to money. I think I see them more as a technology that actually works in ledgering, in tracking things.
Okay.
Yeah.
All right, we're going to be back after this short break. Past picks are coming up next. Time now for past picks, and the first one up is Franco-Nevada. Let's take a look at this company, talk a little bit about what it is and why you like it.
Franco-Nevada has consistently been one of my stalwart of every portfolio. I think this is a company that's suitable for, you know, my parents, for example. It pays a good dividend, a dividend that will grow over time. And if you can bring up the long-term chart, it's actually had a solid performance over the last couple of years, and it's allowed me to take profits and build into the other holdings that I have within the portfolio. It's one that I don't lose any sleep. Pierre Lassonde started it, one of Canada's premier mine builders, and it's been stellar over time. So it's one that I continue to add. It's not a mining company, it's a finance company. So it's a royalty. It's the first royalty streamer to ever come around. And it's not just precious metals, it's also copper, oil. So it is diversified. It's actually pretty solid for anybody.
I actually thought that the yield was going to be larger than it is.
No, it isn't, because it has a formula that the yield will increase as the commodity prices increase. So the yield right now is about 1.3. What's interesting, it has a yield. Not many companies in this sector have. Agnico has it, Kirkland Lake has started, but most of them don't.
So does that mean a couple of years ago it was much higher than what
Yes,
it is
it was.
now? Okay.
Yeah.
Okay,
Yeah.
so it's a formula based on the price of...
On the price of the commodity and the revenue that it's taking from its royalties.
Okay.
Yeah.
Let's take a look at the next... so you own it, you continue to own it?
Yes.
Okay.
Yeah.
Let's take a look at then the next past pick. First, Majestic Silver. Ticker there is FR, up 3%. What kind of company is this? What does it represent?
This is one of the premier silver producers in Mexico, low cost of production, which big reserves on the ground, right? It's well run, great management, fits all of my criteria, and it's one that on a longer term basis should do quite well, because right now it's trading at a ridiculous value.
What's the value of it, or how do you value a company like this?
Well, if you look at the breakup of the parts, if you look at a cash value at everything, it should be trading at much higher, but again, this sector's not attracting any interest from any institutions. Pension funds don't own it. Very few mutual funds own this sector. So at some point, we should see money flowing back in here when the light comes on, just like it did from 2008 all the way to 2011 when the light went off. And we've been waiting, right? If you look at the price of gold, I feel that at some point, we've been going sideways here. We've been staying at 1,300 for way too long, and the demand is there. So at some point, it's gonna correct on the upside.
Okay, let's take a look at the next past pick. Hive Blockchain, ticker there is HIVE. What do we think of this company? What does it do?
This is actually the world's biggest public Ethereum miner. So it is a crypto miner.
Okay.
All three of these companies are either in the other two are part of the equity income portfolio, where it's only 4 companies, silver, gold. This one is in my special opportunities portfolio, and it sat when we bought it at a 3% hold. We watched it go down. It started trading. It was up to 250, and it got down to 40 cents. In December, when we started rolling, making changes in the portfolio, we started adding, and now we increased the position to about 5% of the portfolio. One of the things I do within the portfolio is, for example, Kirkland Lake has been doing very well. We take profits, and we always rebalance. Rebalancing the portfolio is key because it forces us to buy things that are out of favor or are doing well, and sell the ones that are going up. So that rebalancing position continues to work. I think Hive is, it's the chairman and the CEO is Frank Holmes from U.S. Global Partners. It was set up by Fiera Group. Canadian billionaire out of Vancouver. His name doesn't come to me.
Okay.
But it's very well managed. I think that, again, back to your question of do I like the blockchain cryptos? I do, and this is how I'm participating on it. They're mining Ethereum. What is interesting about Ethereum, it's not Bitcoin. Ethereum is the coin that's it's implementing this accounting ledgers that Fidelity is using, that a lot of other companies are using. So I think over time, the technology will come in, and it is coming in, and it is being used, and I think we should get a nice rebound. Another thing that's interesting, the blockchain itself has been on a bit of a rebound. It's trading at about 175 billion now, and it seems to have hit bottom back in December at about 120 billion. So there is money rolling back in.
Okay, we're going to be back after the short break. Our number is 1-855-326-6266.
My car.
Hi, Mike.
Amy, a baseball, and it just...
I saw it. Don't worry. At Desjardins Insurance, we've got you covered. Here's what you do.
Uh-oh.
One sec, Mike. Hi, Liz.
Hi, Amy.
I know your fence. Don't worry.
Desjardins agents are a proud part of the communities they live and work in. Better things beyond insurance.
All right, welcome back. Let's take a caller right now. Frank in Toronto, go ahead.
Oh, hi. My question about the Gold Corp. Just wonder what is happening with the new mount they are joining. The stock sitting very long time, same place. It didn't run. Thank you.
You know, it's funny. I looked at the Newmont Gold Corp acquisition, and I thought, here are two big companies that I've never really appreciated. I've never owned the big ones. My opinion of Gold Corp, Newmont, and Barrick, you know, if you look at this period that we've been going through since about 2013, this lag, these companies are big enough that they're able to sell more and more assets. But by the same token, the companies that have bought those assets have become much stronger. For example, from Gold Corp, Marigold was bought by the Marigold mine was by my Silver Standard, became SSO. Now they've been able to really increase their value because of it. So the way that I look at the Gold Corps and the Barricks is, if you look at the 1995 to 2000 high-tech ride, I rather own the Microsofts and the IBMs. I think Gold Corp, Barrick are going to function more like IBM, the big ones, that the reserves on the ground are going to give them value. The fact that they're producing gold is going to give them value, but the share appreciation, the leverage will come much better from an Agnico Eagle, for example, or Kirkland Lake. where you really have growing reserves on the ground, you have great management, low cost of production, so much better financial leverage. For that reason, I look at these companies and I tend to stay away more than anything. And because of that, no, I would not add Goldcorp. I don't have it in the portfolio, and I would talk people out of it and look at the other good companies.
But completely different risk profile at Goldcorp versus a small cap gold company.
Well, Agnico Eagle is not a small cap.
Not that one, but
no, I'm talking about
just a little
companies like Agnico that are in that spectrum, right? They're going to definitely deliver much better. Agnico is going to be completely self-sufficient by the year 2023. They won't need any more money to continue their growth profile, and they're paying a really good dividend that has grown, right? Okay. So I'd rather reward good quality management that can bring the cost down and give me streamlined production.
Okay.
Okay.
I don't know, did we bring up Agnico Eagle in terms of this stock chart, AEM? Yeah. Yeah,
actually, if you compare Agnico Eagle to Goldcorp back to 2015, Agnico was at $22, and now it's sitting at 52, got up to 89. Yeah. Goldcorp, during that period, continued to go down, right? So it's finally returning. So now if you overlay that to Goldcorp for the last couple of years, Agnico has more than outperformed, and I think it will continue to outperform.
Okay, I think we're going to take a look at that right now. So
there you go.
Okay. All right, let's take another caller right now. Matthew in Vancouver, go ahead.
I wanted to ask about Berkshire. I'm definitely bullish on Berkshire, but in my opinion, Warren Buffett has a habit of buying U.S. banks and smaller, mid-sized companies that he likes. But now they can't compete with the internet companies, the tech firms, and they're not competing for trillion-dollar status with Apple or Microsoft. It's just when he could be, because I think he's a caught at the stock exchange. But what do you think about Berkshire Hathaway? Thank you.
You know what? It's funny. Berkshire Hathaway is such a diversified, big blue chip stalwart. I tend to prefer a Canadian Berkshire Hathaway through Fairfax, and that's why I took the call. I think Prem Watsa, who is, in my opinion, the Canadian Warren Buffett. I really like the Fairfax India fund because it's also given me exposure to India, which is where we have some serious growth. Going forward, Berkshire Hathaway, I think it's not a bad choice. I think that if the market continues running, if we get a lot of stimulus coming in, it should do well. But again, I'm looking at where can we get greater market growth, and I think Asia would definitely be the place where you could redo Berkshire Hathaway going forward.
Okay.
Right, and same thing with Fairfax.
So let's bring up Fairfax, and you're talking about Fairfax India.
Correct.
So that's FIH. What about the actual Fairfax?
Same thing as I'd rather be in India through and play Prem's strategy, Warren Buffett strategy. Here's the big difference, and I sat down with Prem Watsa when they were going public with the Fairfax India, and what amazed me was the fact that in India, 5% of homeowners have home insurance. So there's massive growth within the financial sector for growth. Now that's what made Berkshire Hathaway what it is today. So I'd rather ride that on the way up with the demographics that India presents, and also some currency exposure, because I think if we get the currency shift we were talking about, having Asian exposure will benefit us. Okay,
let's take a tweet right now from Art. Question is, what's your analysis on Facebook? What do we think of Facebook?
I don't own Facebook, but by default, I think the more like I hear it from my kids have become very wary of Facebook. So there is an under the surface question about Facebook, what they've been doing with the data, everything. I think that's going to work negative to them. So by default, I don't think it'll take many people for users to really start using other alternatives. I know that with my kids, it's all Snapchat now. I think that's what it's called, the one where they take a little picture and send it to each other. So, there's other alternatives. So I think Facebook at this point, I wouldn't, and I have looked at high tech before. I don't think I would be. I think it's already done.
Okay, let's take a caller right now. Frank in Edmonton, go ahead.
Yes, thanks for taking my call. My question is on Centerra Gold. What is your view of this company? Is it a buy at this price, or should I wait a little bit longer? And just in general, do you subscribe to the seasonality of gold? Thank you.
Actually, let's address seasonality first, because we are in a pattern where between April and May, gold tends to come down a bit. The Asian demand has passed. The festivals have finished, so we should have a softening in the price. Now there is a game being played here between at the 1300 level, so I wouldn't be too concerned about seasonality. Again, my strategy for the gold sector again is as financial insurance. So it's about holding the proper percentage within the portfolio. Within the main equity income portfolio, that's sitting at 15 to 20%, 15 for the more conservative people. I had it at 5, but I started raising it as we got into more and more volatility within the markets. Now, maintaining that, as far as I think it's important because as we go through these pullbacks, it gives us a good opportunity to average down on positions. So if we're at 20%, all of a sudden we're 17 or 15%, becomes 13, just buy up and buy up the companies that are down more than the others, right? So I'll be selling profits and moving back in. As for Centerra, I like this company because the stock has really held up very nicely. It's one of those that has been moving, which means that money has been coming in. If you look at the chart, it hasn't pulled back the way that the other ones have as much, which is important. I do have a little bit of this within the portfolio, and we have a $9 target. They're also executing very well. It's one of those companies that has great management. I like it. I like how they've been executing. So it's one that I would definitely recommend if people are looking to add. And can't remember his name, but yes, I would.
Frank.
Sorry,
Okay.
Frank.
All
Frank, right. I would advise adding or buying Centerra.
Okay. We're going to be back with Jamie Cresco. He's portfolio manager from Canaccord Genuity. Answering your questions about North American equities, you can call us toll free at 1-855-326-6266.
Why did I choose Vileda? Because of my hoverboard passion.
New Vileda ProMist Max. Use your solution and spray. Its microfiber captures any dirt, and the pad flips over to clean 2 times more surface area. New Vileda ProMist Max.
If it works for me, it works for you.
My car.
Hi, Mike.
Amy, a baseball, and it just...
I saw it. Don't worry. At Desjardins Insurance, we've got you covered. Here's what you do.
Uh-oh.
One sec, Mike. Hi, Liz.
Hi, Amy.
I know, your fence. Don't worry.
Desjardins agents are a proud part of the communities they live and work in. Better things beyond insurance.
Amazon's got everything you need and free shipping for all. Welcome, everyone.
All right, let's take a caller right now. Paul in Aurora, Ontario. Go ahead.
Yeah, I was just wondering what his opinion is on 2 stocks, Precision Drilling and Major Drilling, both out of Canada.
Okay.
Actually, Precision Drilling has had a nice rebound over the last while. We do have it as a buy with a 450 target. I do not own any operators at all right now. I own Precision Drilling. You know, when the sector's hot, it's usually the last area that I would start putting money into. Because of that, I would be waiting. I think the oil producers would be a better place to start adding. So I would be waiting on this company. However, at this current price, if you own it in the past, it's not a bad time to, and you've held it, it's not a bad price to average down into. Also, if you want to own this sector, is I think one of the best ones to get into because of all the contracts they have. We currently have it hold on. The last thing they announced was the sale of the non-core assets, which we thought was great because it did give it a debt reduction, so the balance sheet is in check. Yeah, so it wouldn't be a bad area to start adding if you like the sector, but again, not something that I would be doing within the portfolio right now.
Okay, why don't we take a look at precision drilling on a 10-year basis, maybe even 15 years, just to get a grasp in terms of where it's been in the past.
Yeah, it's been a stellar performer when activity's happening in the oil patch. So if you can ride those waves up, but again, so you know, if you're a contrarian as I am, but I don't want to add to the sector, it's probably not a bad spot to put in.
But, you know, I bring this up. Look, back in 2005, it was trading at $40. So obviously prior to the financial crisis when the economies were strong, but $40 down to $3.68 is where it closed. And of course, so many of the issues, it's not even just the energy price.
You would want to see a break in volume, and
it's also the Canadian price of oil, the WCS, and no pipelines. Hence, we're closing at $3.68 down from that high. It's pretty incredible.
Yeah, so even though we have it as a buy, again, as you say, the sector is not, you know, it seems to be on Medicare right now. So.
And obviously we're speaking on the day of the Alberta elections, so we'll see how that all plays out and how that might help these stocks. We'll see. Let's take another caller right now. Tony in Calgary, go ahead.
Hi, thanks for taking my call. I'd like to ask the guest about North American palladium. It's kind of fallen out of bed here, but it didn't come back to the $13 share offering by Brookfield. What he's talked about it before. What do you think? Thanks.
You know what? I'm still holding on to this in the portfolio. Again, I take a disciplined approach. This is 5% of the portfolio. I'm going to let it. I like palladium. I think palladium prices had a hell of a spike, but I think that spike was to some extent the component of two things. One is demand. Demand is there, but China isn't. There's a supply issue. The other problem is that there isn't much supply out of North America, and North American palladium is one of those. So within the special opportunities portfolio, I continue to hold it. It's 5% of the portfolio. As it becomes a lower amount, I will continue to add to it because I think on a long-term basis, palladium will be an important. It's also a bit of a primary metal, and if we ever get gold really moving, it'll also start to function as a monetary metal. So it's a little bit of both. Yeah, I wouldn't. I'm not selling it. I'm holding on to my position, and I will be averaging down over time.
Okay, we're going to be back with Jamie Cresco. He's portfolio manager from Canaccord Genuity, answering your questions about North American equities. You can call us toll free at 1-855-326-6266. Welcome back. Let's take another caller right now. Mike in Etobicoke, go ahead.
About Whitecap Petroleum. I've got rid of some REITs, and I wasn't in the oils, and I like the yield. What's your thought?
I like it, actually. Again, Whitecap, Crescent Point are my two entry points always to the sector. I like how the price is actually starting to rebound a bit. We have an $8 target on this, and I like the yield at 6.9%. That was March 25th report. We like it. We think that there's a great opportunity, as I'm quoting the analyst, opportunity to add quality at a very favorable valuation. So it's one that, again, if you don't overweight the sector, but if you want to start adding to the oil area, it's a good entry point. But be cautious of the fact, or conscious of the fact that, you know, we need massive increase in international oil prices before the Canadian companies start to be really profitable. If that occurs, though, Whitecap will deliver great leverage on the way forward. So, you know, it's one that we can weigh a bit.
What kind of prices are you thinking we need to see on WTI or Brent?
I think it's more important to see what's going to happen out of Cushing, out of North American prices as they start. So if we get above the $65, $70 range, I think, and what are we trading at now? 64, something like that. I think if we can get that started, it'll translate really well to Canada. However, what are the chances of that in the context of the fact that the global economy continues to slow down? You know, if you look at global economic indicators, there is a slowdown that has been occurring. Shipping numbers are, you know, even lower now. So there is some caution to be said about the energy sector.
Okay, let's take another caller. Wayne in Vancouver, go ahead.
Oh, hi. I'm having trouble finding anything that I consider worthwhile to buy. And I'm wondering what happened to the mantra of the stock market, sell in May and go away.
You know what? That might not be a bad strategy at some point. I've been, again, back in the fall, I was saying raise cash because there should have been a bit of a pullback. Right now, I was lucky enough to, on that pullback, to spend a lot of the cash that we spent, either averaging down on higher yields or picking up a number of really good convertible bonds that are giving us a good interest, plus the conversion on the stock. So because of that, I'm still sitting on the fixed income component, so I'm waiting. So in essence, I did free up my equity positions already, and I'm sitting in a good position. Selling May, you know, if you have some nice profits, it never hurts to raise money and be sitting on a 30-40% cash allocation. It wouldn't be a bad idea either to see how the politics played. I think, you know, again, most people, everybody looks just at the valuation of the stock market. You got to look at the global turmoil that is occurring and accelerating. So how is that going to play out? I think because of that, having a 30% cash position or sitting in fixed income wouldn't be a bad strategy.
Okay, let's take another tweet right now. It's from Gilles Labelle. The question is, can I please have your view on Detour Gold? What do we think here?
I love this company. Actually, this is another company that's in the special opportunities portfolio. It has been there. It's sitting at 5%. I had it at 7% when it got down to about the $10 mark. And what I like about it is a lot of the companies that I've been selecting on a stock picking basis are attracting a lot of big players. Detour, Paul Hankson is involved. Bridgewater. Sorry, I'm having a name blank. But a big Wall Street financier came in and kind of restructured the management. The fact that he's involved is important because it also bring in a lot of other money, right? So a lot of the companies that I'm owning are you know, a lot of big players are realizing that there's value here and they're entry points into the sector.
Okay.
That's also important for the sector because we're seeing good quality money still coming in or beginning to come in.
Okay, we're going to take a quick break, and when we come back, top picks are coming up next. It is time now for top picks, and the first one up, Jamie, is which one?
America's Silver.
All right, it is time now for top picks, and the first one up, Jamie, is which one?
America's Silver. USA is a symbol. This company continues to, I think this company is ridiculously priced. They just finished a merger with buying Pershing Gold. Out of that merger, the two biggest shareholders now is Sandstorm, who's going to come in on the financing side, and Pierre Lassonde is the second biggest shareholder. What I like about this is the management team out of Barrick that left, and there's more than 7 guys from Barrick here, and they're recreating their own company. They've been growing through acquisition. They will continue growing through acquisition. The footprint of the company right now, when you were asking me about breakup value, it should be trading, if you look at it on projected earnings, projecting resource, projecting production, should be trading more like Wesdome or McEwen Mining, which is in the 400, 500 million market cap, and they're trading at about 120. So it offers a really good entry point, very well managed, very low cost of production. It's also gold, silver, and base metals as well now. It's not just silver. So, yeah, it's one that I've held for a long time. Okay, let's take a look at the next top pick, Enbridge. Enbridge, great yield, again, part of the pipelines for the dividend payers. I think this is a really good addition in terms of income. Right, so this is more for the my equity income portfolio and for anybody looking for dividend income. I think Enbridge and all of the pipelines represent good value. Okay, we've got to leave it there. Jamie, thank you very much. Thank you. And thank you to our viewers as well. And as always, please do consult a qualified financial advisor before making any investment decision. Thanks again for joining us, and we certainly hope to have you with us tomorrow on BNN Bloomberg. We'll see you then. Thank you.